Hi, everybody. This is Gary Dean Sentiment Timing, and this is our technical video report for Tuesday, September 16th, 2025. So, really, not a whole lot to go over today. Everyone's really going to be waiting for the Fed decision tomorrow. At the 25 basis point, that's basically 100%. Really, what's going to be taking place, and I went over this in the premium report, is what does he say after it? So, the 25 basis points, that's a gimme. If he says 25 basis points and then we're back to data reliant to see if we're going to do any more rate cuts, me personally, I think you can see the S&P down 100 points from that. If he says that we're doing a 25 basis point cut now and we're looking to do another couple by year's end, that's probably going to be the status quo. I think that's what a lot of people are expecting. We may pop a little bit and then pull back. It won't be anything exciting on either side. And if he does a 50 basis point cut, which a lot of people are saying is not going to do, but I'm not ruling that out at all. I think that we can see the S&P jump up 50 to 100 points, but from there, then drop 3 to 400 points because then the rate, it's going to be, is there going to be any more rate cuts for the rest of the year? Number one will be going through traders' heads. Number two is, are they doing this because they think the economy is worse than they thought? There's going to be a bunch of things. So it would be initial pop up that I think will not last, and then from there, we actually get some kind of backing and filling that could take the S&P deeper than a lot of people are thinking. But even if it's not as deep, it's going to be going fast because they have this ball pushed under the water so far, and if they slip at all, it's going to be shooting up into the sky. And what that means is the bullishness is so compact right now underwater where they're holding this ball that if it slips, the bearishness could go sky high in a very very fast manner. That's probably the best way to say this right here. And so I think that this is kind of what we're nearing the end of this bullish phase. And the last quarter, I think it's going to be a little bit different. A lot of people have been really trading this rate cut, and as I've been explaining, I do believe President Trump is 100% wrong on this. Not that the Fed shouldn't cut rates, but thinking that we should do 5 or 6 or 7 points, cut and stuff like that. He's a borrower. He wants lower interest rates, but when you look at it, what it doesn't really do anything for the economy. That's what he has to be really concerned with is the economy, not whether somebody can buy a building at 2% interest rates instead of six. A lot of the interest rate, what they're worried about is really paying our debt that the government has borrowed because that's where the expensive part is. But as far as the economy and all these economists that are coming out, I just don't. I think those are the ones that have been in this market since, the rates have been low and they don't know anything else because, like I said, the lower rates does nothing for the economy. You're not going to get businesses that are going to start borrowing because interest rates are a quarter point lower. It just doesn't make any sense. So, um, I'm not going to go into too much detail into that because that's not really what we're doing here. So tomorrow, we just have to wait and see what the Fed decides to do. If they decide to shoot it up, I think the best way to show this is on this chart here that shows us the call wall. So if they do a 50 base rate cut, then we have the 6650. This is the call wall right here. Above that, then we're looking at 6700. Now here's the problem though, is that if they say anything to disappoint, we have to go all the way down to 6500 to get into any kind of option support. So we have two resistance levels up here and one that's 100 points below. And if you start looking after that, now we start going, they're in 100 point chunks here. So that's where I'm saying we could really, you can see if things start to drop fast, that there's not a whole lot of support levels on the options. And they also coincide with actual price support. But on the upside, you have 6650 and 6700. So those are going to be the areas that we really want to keep an eye on. Like I said, I've been focusing on individual stocks now. I actually started dipping into IWM today because it made it down to support, which I put into the room. And I think if they do some kind of a drastic rate cut like 50 basis points, I think you'll see the small caps that will outperform the S&P as well as the Dow and all that, probably by the 2 to 1 margin. So if we see the S&P up 1%, or 1.5%, don't be surprised to see the small caps up 3 or 4%. So that's the way I'm leaning on that. Support wise, let's just go to a shorter term charts here. So you can see again these green lines; these are option related, so they're GEX, they're gamma lines. So you can see we popped above it, they came right back down to it. That's pretty much where we closed. If they get below that, you can see we have some support at the 65.80. We have a 23% retracement, but you have the 200-day moving average that's at 65.60. So this is really the first support area to watch. And then below that, we have 65.50, which is another option related support. And then also we have 65.37. So this area is really going to be, say, that the area that we want to keep an eye on to see if if the bulls are going to be able to hold this. Now, if they don't, obviously we have other support levels below it. But the thing is, if they hold it, then we could see that next spot up. But this is the resistance at other support areas, the 65.80, 65.64, and then we get down to the 65.50 and 65.40. So these are your important support levels. Again, on the upside, we're really, hang on one second. Now, the upside, we really just have that 6650 and 6700. So again, these are going to be your important areas that we wanted to watch on the downside. We burned off some of the overbought levels right here, but we're working on bearish divergences that, an 8-point drop is not really going to fulfill this bearish divergence. So tomorrow, I'm kind of leaning on. I'm open minded. I don't think we could jockey back and forth as we head into the announcement. Then from the announcement, it's really going to be what he says. If it's a 50%, 50 basis point cut, I think you just see a massive move to the upside because there's a lot of people that won't expect it. To me, that's the evil move, or the most evil, because it's going to have everybody thinking that the waters are safe. This is what the market needed. We're only going to scream higher, only for the big boys to pull the plug out, and then all of a sudden there's no bid, and we start trading down near the 6,000 or even down to the 5,600. That would catch the most people off guard. But again, let's just see what plays out tomorrow. There's no sense even guessing. Are we going to have where support or resistance is right now? Let's just see what plays out from there. Be in the room, be ready for some trades, and with that, have a fantastic night, and I'll talk to you guys.